Welcome back again to the Tesla Fanbot channel for Botcast number 2. And welcome for the first time if you've just found this channel. This time, the Fanbot is going into the reasons for a stock split and why it is a useful thing for investors. Here's an analogy for why a stock split creates more versatility for people investing in a company. Just imagine if the lowest denomination of currency you could get was a $100 note. In fact, we have all those lower denominations like a dime, a quarter, or here in Australia we have 5, 10, 20 and 50-cent coins, as well as $5, $10, $20 and $50 notes. What this means is that you get to use money more efficiently. If all you have is a $100 note to buy a small item like a coffee, you can get change in smaller notes and coins, and then you can use that change to buy other items. So how does this relate to a stock split? Well, when a stock splits, it essentially gets broken down into smaller pieces according to the split ratio, whether it's a 10-for-1 split, the Fanbot's preferred option, or perhaps 5-for-1, 20-for-1, etc. Just to give an example of a small investor who currently owns one Tesla stock worth $1,000. If you are a small investor like that and you want to cash up some of that investment when the stock rises because you want to take a profit to buy something or invest in another EV stock like BYD while keeping some of it invested in Tesla, you literally can't do that. But following a 10-for-1 stock split, you can now do that. You could keep 70% of your stock invested in Tesla and just cash out 30% by selling 3 of those 10 $100 shares. Even if you own 5 $1,000 pre-split shares worth $5,000, it's not very flexible. You couldn't cash out 70%, it would have to be either 60% or 80%. And of course, the more the share price grows, the less flexible it becomes. Okay, so some people are going to say, well, you should have fractional shares. My answer to that is that fractional shares are a solution to the exact problem I have mentioned, and of course fractional shares will give you even more flexibility by splitting the shares even further, but not everyone wants to have a fractional share account. You don't get voters' rights if you only own half a share, for example. I would also question the wisdom of investing in the share market if you can't afford to lose $100 if something goes wrong. You probably need to get your basic financial affairs in order so you have discretionary income that you can afford to lose $100, because nothing is guaranteed in the stock market. And of course, a small investment like $20 or $50 is not going to make you rich. It won't replace your income or allow you to buy a car, for example, as discussed in previous Fanbot videos. You'll notice I am using the word stock and share interchangeably here, as in Australia we use the word share whereas in America they use the word stock to describe the unit of investment in a publicly traded company. So yes, the Fanbot is not promoting irresponsible investing. Before investing in anything, please see a financial advisor, which I am not. I am just a Tesla YouTuber expressing an opinion on a financial topic as it relates to the subject of investing in Tesla. So, keeping it short and sweet, that was my second take on the Tesla stock split. Thank you for listening, and please comment, like and subscribe to help the Fanbot grow his channel.